Hello everybody, welcome to the TraderMerlin show. I can see we've already got a big group in here. Hello Koja, Batista, Vernon, Terry, Ivsy, Big Eb, Jonathan, Tom, Les from Cape Canaveral again. 2 days in a row, Les. I must be doing something right. Mimi and Jorge, I'm sure we're going to have a lot more than that. And I know you guys all came to see... Yeah, not me. Probably my lovely guest, who we'll bring up here in just a second. All in all, a fairly decent day. Most of the indexes closing in positive territory. Nothing crazy, even though the testimony from Jerome Powell regarding the CARES Act was mostly positive for the market. We had some economic data, which I'll talk about here in a little bit. But I'm going to go right into our guest today, who usually does a weekend market outlook for the S&P 500, but was a little under the weather this weekend, so we missed one, guys. Sorry about that, but I've got the lovely and talented Tillie Allison-Harris joining us today. Tillie, how are you today?
Great, Merlin. Glad to be here. And I'm really having a hard time to believe that the market made an all-time high this week, that Monday breakout. It's almost like having a hard time believing that we're living in a world when we wear masks. You know, like, how many of you wake up every day and you're like, I can't believe I have to wear a mask all day?
And then there's those that love masks, right? And it's like, it's great to be wearing masks. It's funny because I have a couple friends who are like the worst introverts in the world. Like, they don't want to leave their house. And they're like, I've practiced for this my entire life. This is perfect. So there's people like me who hate this because I want to go out and explore the world and have fun. But yeah, you're right. It's hard to believe not only that we're stuck in our houses on quarantine here in California, but also that the market is ripping towards all-time highs. It's pretty crazy.
Yeah, I think it really demonstrates that the big companies out there that are holding stocks and all other forms of investment, corporate products, really believe that things are going to get better, not worse, because they've always said that the S&P 500 is like a leading indicator of the economy. Yep. So pretty good optimism there.
Gotta love the optimism out there for sure. You didn't do a weekend outlook piece, and I know that your belief was that at some point we're going to go higher, but it sounded like you were expecting more of a sell-off, a retracement back into some of these demand zones before we went higher. Does it throw off your evaluation, the fact that we really didn't drop at all and we just started ripping to new highs?
No, I think it just proves that the market is way more bullish than I or anyone else expected. And, we never know when it's going to break out. So we put an alert system kind of at the all-time highs, and when it breaks out, then of course we're going to try to be more bullish. But it's really hard to trade breakouts. We talked about this before because there's no profit target. Right. The great thing about trading inside a range is you kind of have an idea of where it's going. So we have to use more historical projections. And right now, being at 3,700 on the S&P could definitely go to 4,000. And I can't even believe I'm saying that. It just seemed like, not even a year ago that we were making the 3,000 mark. So, the Dow Jones at 30,000, that's amazing.
Yeah, and given the comments and the testimony that was made recently, I'll see if I can find that for you. I had it all set up here with regards to the testimony and information, but I don't know where I put it all. So maybe I won't bring that piece up for you. But yeah, the testimony today from Powell was interesting. He pretty much said what we were all expecting, which was we're going to basically back this market no matter what. And I have it here. Where is it? Jerome Powell piece. Come on, Merlin. There it is. For the viewers at home, I'll read it, and for the podcasters, you won't be able to see this. So he says, the risk is that over time, they go through these savings, and of course he's talking about the American people. They haven't been able to find unemployment yet because it is going to take a while to get 11 million people back to work. So their spending will decline, he added. Their ability to stay in their homes will decline, so the economy will begin to feel those negative effects at some time. And this goes back to what we've been talking about in the show for a while now is, at some point, it's coming crashing down. But right now, we know we have the full backing of the Fed, and now the pressure and comments from Mnuchin and Jerome Powell yesterday and today. My guess is you'll see a stimulus package come in here real soon, which, your 4,000 projection on the S&P, I mean, that could happen very quickly. I see Big Eb says S&P 3,800 this month. That would not surprise me at all to see that kind of move.
Yeah, absolutely. And I think it's very interesting, the statements there that Jerome Powell made. And the truth we very well know is that a lot of people that we know personally are able to get some sort of subsidy, and whether it's unemployment, but a lot of people are staying at home because they're making more staying at home than going back to work.
Sure.
And then as far as those statements about, people stay in their homes, is he referring to mortgage defaults? Is that what he was suggesting?
Sir, yeah, I think he's talking about just this. There's going to be a domino effect here where if people are spending their savings, then not only does that deplete their ability to save themselves in an emergency, but, even day-to-day expenses may become challenging. So they might spend less, and all of a sudden it becomes this this domino effect where, yeah, they might be missing their mortgage payments. And we know that the government and the Fed will step in and bail them out. But I think it creates that argument that this market's going to continue higher because you have nothing. The market itself should fall, but you have all these backstops which will prevent it from falling, so it can only go one direction.
Yeah, I think for the first time in history, we're really seeing where not only have banks always been bailed out, if you will, in economic crisis, where now people are being helped out more. And like you said, if we do all of a sudden have a downturn in the economy and it is based off of the pandemic, likely, the government's going to step in and do something that's never before done in history. Mm-hmm. And then I think that just makes everything new unknown. And it's, the market is pricing that in as very positive.
Yes, it is. Let's go into a bunch of different stock. I want to make sure we get to listener questions. I had two specific equities, one broader market sector, and then maybe we can go into S&P and whatever listener questions have here. The first one I want to get to is this one from Leslie. So Leslie, thank you for the comment. She says, I've been holding GE since June and was wondering where you think it is going to go. Obviously, Leslie is positive on this one and optimistic. I will bring up the chart of GE for you guys. It has been a phenomenal run since October, where it's down below $6. Now it's up at 10. Certainly, people probably eyeballing that $13 mark way up there. But what's your take on GE and where it may be headed?
Well, I'm just happy that GE has come back to life, if you will, right? So this is actually a company that I have myself in my own portfolio because a lot of us have expectations that the company will do better. And given that, one of those bargain basement deals, mm-hmm. Who can't buy GE at $6 a share, So expectations that my question is, what's going to happen about $12, $13? Will it pull back to 8 and then go higher? So I do expect it will probably trade between the range of like $12, $13, maybe come back to $8 around that range before going higher. Very long term. Mm-hmm.
Marking out those levels. And, for Leslie here, it's the challenge is, and has been for many of us, when we have such a parabolic move. And you look at the move from late September in GE, where it was down below $6 to where it peaked at almost 11 just a couple days ago. That I'd consider that a parabolic move, and chasing something like this becomes rather challenging. So I'm happy that you bought in back in June, because that means you bought in somewhere between $6 and $8. So congratulations there. There are a couple things I'm looking at. Number one is just kind of the candle formation that's happening right now. Some would call this a bullish flag formation, which is basically this little period of consolidation where price slowly drifts down in a kind of a tight channel after a big rally. And I drew the markings on that for you. Today's price action actually looks like it could be that positive break of a bull flag. If that happens, that $13 target would be achieved pretty quickly. Now, I'm one of those that doesn't want to look a gift horse in the mouth. And if you are holding on nice profits now on GE, I would certainly recommend looking at maybe some strategies to help protect that position, whether you're using options or selling half of your position and moving your stop loss up. I'd rather see you lock in some profits than have GE, report an accounting irregularity, and next thing you know, they're back at 6. So always try to lock in some of those gains going up. But all in all, GE, their slogan used to be "Bring good things to life." It looks like they're definitely coming back to life and looking rather positive out there. So, Tillie, you got this one in your portfolio?
Yes.
There we go. We got to put that asterisk on the screen, right? We don't know it. You know what? I actually, this is going to sound kind of embarrassing.
Yeah.
I actually think I do have GE as well.
Right. Well,
I have too many accounts.
For things that, a lot of people know, I'm an active trader and I use other products like futures and options. But, long term, to be able to pick up companies at this kind of price and hold them, that's, what is it? Isn't like long-term investing historically the biggest moneymaker for investors of all time?
Absolutely. But I think it goes, you're right with that. But I think, when we hear statements like that, you're right. Over the long haul, investing is the biggest wealth generator ever. However, market timing is key. And there may be some people watching this show that are just getting into the markets right now for the first time and like, I'm buying everything. It's like, well, hold on a second. Those numbers may apply to long-term investing, but there's also market timing principles. You don't want to be buying at the dead high. And, for those that might not know what I'm talking about, let's bring up that chart of the S&P 500. Well, this is the spiders, but, I'll bring it up to a monthly. you guys can see where we've come from. If you're buying right now, you should do so with a little bit more caution than you normally would, because that chart says, things are going to have some correction here. And if Powell's comments in front of the Senate subcommittee today were on point, he's expecting some pretty ugly things in the near future. So while I do like GE right now, I think it is not, nothing is completely out of the woods and foolproof here. There could certainly be some downside for these stocks.
Yeah, and what's always said about the market that we know, that the faster the market goes up, the faster it will come down. So even if it does make it up to 4,000, it can drop back down to 2,000 over the next few years. And then the sad reality is most people won't even know the difference.
Yeah, absolutely. Boy, the chat's really good. I want to go into the conversation in chat, but let's go to our listener questions first, and then we'll start talking about weed. Cannabis. I'm going to be like Snoop Dogg and just roll a blunt on the show today and get high while I do it. I'm just kidding, everybody. I'm not going to do that. Let's see. The next question I had, let me see where that one was at. I got too many screens working here. Alex says, could you look at Facebook stock on the show today? I'm sure that Don Fron, who might be watching out there, is loving this. I know he's a Tesla Facebook guy. So for Alex, I will bring up the daily chart. Actually, I'll start with the monthly on Facebook so you can see the similar parabolic moves on Facebook. We will whittle this down to the daily time frame. You can see that it's been channeling sideways with a slight uptrend for the last couple of months. What's your take on old FB?
Yeah, so I'm just nuts crazy because this we've seen this thing rally up from 270, and as it trades up to like $295 a share again. The question is, what's going to happen at that price point? Because we could get a correction, or it could just blow through and go to 300.
Mm-hmm.
But I do see this as quite a bit of strength coming in, and the basing prior to this, selling area, like you were saying, some sort of like a flag type formation. So, and this is what we would have to see, for the market to go higher. These kind of companies have to lead the way.
Yeah, who's the gentleman that sent in that question? That was Alex out there. Alex, I would be more optimistic on GE from a technical perspective than I am on Facebook. And the reason is I just think that these FANG stocks they were at the right place, right time during COVID. And while we are going into another lockdown right now, that might benefit them. But I think we have to be a little bit cautious because at a certain point they accelerated so quickly. I think they got ahead of their valuations. There's also, a lot of people that hate Facebook and they're censoring and all that stuff. So you think that it might, suffer a little bit there. That sideways action that you see on that chart, I'll bring it back up for the viewers. It's not that it's horrible. It's certainly showing an uptrend, but it's not as steep as it was back in the first part of the year. Tillie's right. You've got 294 is a certain stopping point, which the way it moves, you can probably hit that thing tomorrow. But then right around 300, you've got another pretty challenging area for Facebook to get above. I'm not as optimistic on it. I just don't see as much price appreciation here for Facebook as a potential is for maybe GE. And part of the reason is GE was just so damn beaten down that at a certain point it has to kind of pop back up a little bit. So Facebook, I think, maybe overvalued at this point, whereas GE, I think, at a certain point was undervalued and therefore allocate a little bit to the portfolio. There we go. Got two out of the way.
Well, I think if Facebook were to do something very innovative, which they very well could, then that would be something that could drive them to higher prices. But yeah, definitely when companies like this have traded this high before, unless they have new innovation or some expansion, like what Amazon has done is amazing. I think, seeing that these companies, as they become more innovative, then the sky's the limit on some of those.
I don't know if anybody here has experienced it, but they opened up an Amazon store here in Southern California. I think it's actually in Tustin, where you literally just put all your stuff in your shopping cart and you just walk right out the door. So here you are. And what I'm worried about is all these people who are using an Amazon store, right, and loading up their cart with liquor and food and steaks and everything. And an Amazon one, you just literally push the cart out the door. You don't take anything out, and you're fine. It's legal. And then what's going to happen to those people that are used to that system and they go to the local Vons or Kroger's and just walk right out the door? Oh, I'm sorry. I thought I was at the Amazon store.
Absolutely.
It's coming. All right, last one from the pre-sent in questions that came in earlier. This one is from Gene. It's a really good one. Boy, we've talked about this quite a bit. Gene says, you've talked about how energy is the worst performing sector this year. Is there a point where you buy undervalued stocks? Now, before I turn Tillie loose on this one, because I know she loves that topic, I want to guys show you the sector chart here. And this sector chart, guys, all it is I took most of the major ETFs like XLI, XLP, XLK, XLU that represent the broad sectors of the S&P, and you can see I've anchored it to January 1st, 2020. And there is a huge separation between these two. The best performer you guys can see right now that I have on my screen is SMH, which is semiconductors, up 47%. That might be too specific of a sector, so you might have gone with technology, which is up 33%. Down at the bottom, though, I mean, this is the big loser on the year. That's energy. That's XLE ETF, down 37% as of today. At one point, it was down over 60% on the year. Tillie, I think the gentleman's name was Gene. Do you buy these undervalued stocks? Should we be looking at maybe some allocation into energy?
I think about 3 weeks ago, there was a trigger, XLE, the energy ETF. And then so we've definitely seen a confirmation of that, but it definitely, this is a real classic bullish breakout. So as long as it, stays above the low of what was that low there? XLE is the energy ETF, $30. Mm-hmm. Now we're almost we hit $40 last week. So this is definitely a confirmed breakout. And, if we get a retracement back to 36 or even 32, it can even go down to 30, then that would still be quite bullish. And so, yeah, I mean, if this sector does cycle like that, and we see a lot of energy companies stronger, that again would be another catalyst to push the overall market up higher.
One of the things I think is critical for everyone here, especially since Tillie started off with the comment that the investing for the long haul is probably the biggest wealth generator ever for mankind. Part of that also, with the buy and hold mentality, there are certain things we can do to help increase the rate of return. And one of the things that Tillie talked about on Power Trading Radio years ago, she spends a lot of time talking about this in Strategic Investor and the different classes that she teaches, is rebalancing. And if you are holding a portfolio of different investment vehicles right now, maybe you need to, at the end of the year or every 6 months or year, evaluate and see, okay, I started off with, let's say, 10 positions with 10% allocation in each one. Well, the way that energy sold off, it might only be 5% of your portfolio now. Well, maybe you rebalance and you buy back in to put that up to 10, meaning you'll buy more energy stocks to get your allocation back to 10%, and then over the long haul, that will return back to its normal and give you a greater rate of return.
Absolutely. And whenever we see something like this, because we all know a lot of investors have been holding on to energy stocks, for the last how many years. And then that can really put a big, all the capital is just, getting washed down. Mm-hmm. We call it a bleeder. And oftentimes we sit in that for a very, very long time. So to have a little bit more capital available, and one way to do that is by reallocation. So, things that have done well, you kind of can't go wrong protecting those profits. And one way to protect them is to allocate into something that has the potential to do better, because it's always said, we can reduce our position size and stay along the market and still earn more rate of return from that investment. So like if someone's long any sort of group of stocks, just like technology,
right? And
technology done very well, taking off a quarter of that percentage and allocating that 0.25% to something like energy. Energy has the potential to earn a higher rate of return, but that allocation is still holding 75% in the technology. So they're kind of getting the best of both worlds.
Yeah, and I think when we look at that type of separation, I don't know, maybe separation is not the right word, but when you're breaking down your investments and looking at how that money is allocated, we talk about XLE. There was a good comment that came in here from, where was it? It just popped through. From Richard, it says, ExxonMobil and USO are hurting and may never get back to their lost value. There are better opportunities out there. Exactly. Well, I would certainly take two things and separate them here in your analysis. ExxonMobil and USO are not even in the same ballpark. One is a company. One is just a product that buys forward futures contracts. So there's a problem built into USO as an investment vehicle. It's dangerous to hold USO long-term because of contango, which we can go into another time. ExxonMobil, on the other hand, I'll bring up that chart. But before I do, take a peek at XLE, right? This is the energy. And if I go XOM, you can see it certainly hasn't balanced as much, but it's still doing okay. If we break apart that ETF of XLE, which is energy, if you were the type of person like myself who doesn't want to dig down deep into the minutiae and find the best performer within this basket of securities, and for those that don't know, XLE is a basket of energy companies, you could just buy the whole damn thing and call it a day. If not, you could break it down. And, inside of XLE, you've got Kinder Morgan, Schlumberger, ConocoPhillips, Exxon, Chevron, Phillips 66, Williams Companies, Marathon, Valero, EOG Resources. I mean, there's a ton of companies inside of this that one of them is a great overperformer, and some of those can be great underperformers. So we can, if we want to, go and take the time and break that apart. But ETFs are a great way for us to not have to do all of that work when it comes to evaluating companies' performance, right?
Yeah, absolutely. That's one thing that so many investors are picking individual stocks, and I mean there's an approach for that. But if we can group them all together and get the best of the best at $30-something a share, earning a rate of return on that's going to be a lot more systematic, if you will, because the more stocks we have, the more decisions we have to make, and kind of allocate it into different groups tends to make it a little bit easier. A lot of people want to have their fun money and, pick a few stocks for more fun, if you will. But as far as portfolios that are really designed to have a more targetable rate of return and kind of know what we're going to get, the ETFs are really reliable because we can measure the historical movement to anticipate the likely performance of it a little more predictable than an individual company.
Yeah, that's the challenge sometimes, is picking individual ones. We all want to get in that racehorse that's going to win the race, but sometimes you just say, well, is it going to be a win, place, or show? I'll put in the top three, just kind of get there. So buy the basket. Question from Big Eb. And Big Eb, thank you for the comments and hope your travels went well. He says, Merlin, Tillie, what are your thoughts on Amazon? Is the upcoming highest Q4 revenue for them already priced in? Of course, I can bring up that chart of AMZN here, and you guys know it's a spectacular chart when we start off with that weekly. I'll look at the weekly here so you guys can see that. There's your weekly of Amazon. This is why Jeff Bezos is the richest man in the world by a giant margin. Will probably continue to be so. But if we look at the daily, Amazon doesn't look that great right now. It's really just been sideways since July. What's your take on it, Tillie?
Well, I was actually reading the comments about some of the, like Richard, about allocating into other things. So I'd like for him to be more specific on what other opportunities, because we can definitely compare that for sure. So I think one thing about my particular personality is I'm looking for safety and stability. Where if someone's looking for a high rate of return and more of a roller coaster, that this is a different style. And so I think individual companies are a better fit for someone who's looking for more volatility. And then I love the comments here about OPEC manipulating prices up to 40 with the belief that they'll go back down to the toilet. And so that's the benefit of if one does, buy in at $30 or 32 or 33, then, right now they're already at a place where they can protect some of those gains.
Yeah.
So I think really the important thing is to recognize, what someone's investing trading style. And, it's like finding the good, your car, what kind of car do you like to drive? There's always an investment product or a stock or an ETF that fits the investor style of trading. But then also realize that management techniques are critical because, if someone's looking for safety and stability, trying to buy in cheap, and then as they become more profitable, protecting those gains, whereas someone else would do the exact opposite. They start buying in when things are getting more expensive and they buy more,
right?
Kind of average in. So everyone has such a unique style.
Yeah, and that's the challenge as, someone who's an educator and have taught longer term and shorter term investing styles. There's always that challenge of making it fit individual people's style. And I think one of the things I talk about in the trade plan class is doing analysis of what your style is. And I'm more of an impatient person. I like to do day trading and shorter term stuff. Holding Amazon for the next 3-4 years, that is not in my cards. But there's some people that just live by it, and it's the way that they do it. Did you look at Amazon real quick and just give me your take? Because I know you like the longer term. This might be too volatile of an instrument for you. I know you like ETFs and such, but it's been just, I don't know, I would call this absolute boredom. I'll draw on the chart here as you talk about it, but it doesn't look that exciting right now.
No, well, I don't know how many of you have ordered Walmart groceries, but I have. It's like crazy. So, I'm going to say that Amazon's had a little more competition, in the last, 6 months. So I think that they've definitely, seen competition step up in the marketplace as well, literally. I mean, how many of you, does anyone not order Walmart now? You can get $100 a year, and it's a little more convenient than Amazon, you got to wait, a whole day, right?
A whole day, Tillie. A whole day. Oh, heavens me. I have to wait 24 hours to get my stuff.
At Walmart, you can get it same day. Like, boom.
Well, you must live next to a Walmart. I mean, that's what you get out there, in Kansas City. It's just Walmart stores. We're a little more spread out here, so we like to get in our cars and go places and check things out here in California.
Well, when you got a little toddler at home, and their little favorite Gerber biscuits are at Walmart, and you can't find them. I can't even find them on Amazon. That's all I'm saying.
That's it. Supply and demand, people. You want to make money?
I'm going to blame this all on Gerber biscuits.
Buy Gerber biscuits. Go long Gerber stock, because Tillie said the little one loves the biscuits. All right. Well, the chart here, I drew this on here for the question from Big Eb. Do I think that the biggest ever is already priced in? I think that goes back to my earlier comments about a lot of the FANG stocks being overpriced based off their earnings compared to what they had done historically. And we know that the sales are going to pick up. I do think you'll see the largest sales numbers in the history of anything for Amazon on their next earnings announcement. But is it already priced in? My gut tells me that it is priced in, but we'll still see a big jump when those earnings numbers come out. And just by the way it's been traversing sideways here as the equity markets are making all new highs, I think it goes back to something we talked about in this program, maybe 2 months ago, where I said, look, there's going to be this rotation out of the super hot, exciting, big gaining stocks like Facebook and Amazon and Microsoft and Google. And it will go back into some of these companies that have been really beleaguered and beaten down and just kind of fell out of favor. And that's what's kind of pushing this market up, because clearly it's not the FANG stocks. I mean, if you look at the charts here, there's Amazon. We can go, there's Google, right? So Google is making new highs. Facebook is sideways. Microsoft, which was one of the major factors for this market moving up, it's totally sideways. I guess you could look at NFLX as well, since you're talking FANG stocks. I mean, totally sideways. And then, of course, you have Apple. So out of all the FANG stocks, only one is making new highs, and I think that this is due to the fact that most of a lot of the capital being pulled out of FANG stocks, moving into the undervalued stuff, and that's why we're seeing these markets move up. So I'm a little cautious on these on the FANG stocks as far as buying into them right now because of the sideways action. Wait for them to move.
Yeah, and definitely as we approach the end of the year, that reallocation of taking some of the profits off of you got to pay the bills, got to pay taxes. And then reallocating, there's been a lot of talk in the industry about, how do you even define value these days and how do you find it? And I love all the comments here. How do we get consistency that go through a mindset change in order to make money consistently? I had to choose strategies that were really based off of an income so I do a lot of longer term investing, and I use very basic options, and I love to sell cash secured puts. And if the portfolio is big enough, we can afford S&P 500. And it's a strategy that's going to earn income, whether the market goes up, down, or sideways, doesn't matter. But there are certain strategies that are really designed to earn consistent rates of return. And of course, I'm not going to get the big high flyers. So part of my portfolio is specifically designed just to target that rate of return on those particular option strategies, which are very, very low risk. And then though recently I've had the realization that I have some smaller IRAs, and I'm going to have to do more spread trading because they can't afford the spiders. Mm-hmm. And they're smaller, so they need to grow. So I'm going to have to increase the rate of return. So I think that if an investor trader can find certain strategies that are really designed and have been proven statistically and by real people trading them, then that's what we can use to anchor our strategy on. Mm-hmm. And the options market is the only market in the world that has ever been tested and tried true to there are certain strategies that we can really target said rate of return.
Yeah, and I think that we talk about it being one of the best investment vehicles out there with options because you can make money in up markets, down markets, sideways markets. But I'm with you. I like cash secured puts and just selling and getting my 1% to 2% a month. Fine, we just slowly kind of build these accounts, and over time, you'll develop great rates of return. But many people want to take on that big risk, and they want to jump into Amazon or FANG stocks, and that's fine. But to the question here from was it RB that asked about consistency? Yeah, RB.
Yeah.
The key to consistency is this, and it's only one thing. It's not picking the right stock. It's not making the best trades. It's not making tons of money. The key to consistency is not taking big losses, period. Because if you have big winners, great. If you have small winners, great. If you have small losses, fine. But if you have big losses, you are screwed. It will eat away at all your gains. So just don't take big losses, period, no matter what you trade. And over time, you'll get better at trading. Your rate of return will get better. Your winners will be better. Your win percentage will be better. And your psychology will be better. And your account will grow. And that develops consistency. Done.
Absolutely. And that's one thing about derivatives that a lot of people get bitten because they start to trade derivatives, and all derivatives, most of them are contracts that are time-based.
Right.
And if a contract has a time-based expiration, you can get stuck in a trade and, oops, I think the lights went out. You get stuck in a trade and then you run out of time. And that can be the worst for like someone who's trying to, figure out what their trading style is, because they'll run out of money before they run out of trades.
Definitely. All right, I'll let you jump up and turn on that light real quick. Right. So let's deviate here a little bit. We weren't going to talk about this too much today, but you guys might remember during the presidential show that I did with Larry Jacobson, I said, one of the big areas that could really see a big boom was the cannabis industry. If there is federal legalization. Now, of course, you may have read or heard that Nancy Pelosi proposed to legalize marijuana and cannabis on a federal level. And of course, every Republican is attacking her, saying, why aren't we talking about jobs for Americans? Why aren't we talking about stimulus? You understand, if you legalize cannabis, you're creating thousands and thousands of jobs. So this would be a massive job creator. Of course, it's also the amount of tax revenue we would gain from taxing this thing. But bottom line is, this is huge for the industry. And I know Brendan's out here just jumping up and down because he's heavily invested in the cannabis stocks. We've looked at a lot of these charts over the years. MJ is probably the easiest representation of the industry. And you can see that from early November, right before the election, it took off from about 1050. MJ hit over 16 in just 1 month. That's a pretty phenomenal rate of return. And if we do get federal legalization, that could just be the beginning of a much, much bigger move for all these companies. I'd love to get your take on that, Tillie. I know you're not a grower or a regular consumer of the product, but I think you understand that the potential for massive gains in a sector because of something like this.
I know that the use is very diversified. So there can be such amazing products from cannabis itself as far as medical and recreational. It's been proven to just, I think we can all count probably 100 different products that cannabis can be used for in so many different ways. So I think that to be able to legalize it is probably the right way to go. Of course, you're going to have to, put some restrictions on some type of the cannabis. We all know that. But I do see it as a market that's going to be offering tremendous growth opportunity in so many different industries, the medical industry, the technology that's used to develop everything. I've heard such wonderful stories from people that I know personally that have suffered from, medical conditions. And then they've seen that it has a big impact on their life, and children that, suffer from terrible diseases. And what else can it do? We don't even know what else other products that haven't been developed yet. It's amazing.
Yeah, it's interesting. There are a lot of obviously positive sides to it, and when I hear somebody just slam cannabis and say, "Oh, this stuff's terrible," it's just an illegal drug, you probably watched Reefer Madness and haven't done your research. If you want to watch something interesting, go to YouTube. Bell's palsy is a common one that it actually helps significantly with cannabis. Bottom line, there's many different things. One of the most interesting ones I saw was a young boy who had like 100 seizures a day. I don't know if you ever saw that video, and finally the doctor or his dad had him on all these pills. He's taking 100 pills a day for all this different stuff, including Valium, which for toddlers is not, or for young kids is not a good thing. And finally, someone just suggested CBDs and THC, and they gave him this stuff, and he went from like 100 seizures a day down to 1 or 2 seizures per day. First time he could actually speak and communicate with his father, and like the dad's tearing up and stuff. And that's probably the extreme case, but almost every other leafy product is legal in the United States, but to call that one criminal and illegal, it just doesn't make sense when there's so much benefit from a medicinal perspective and also taxation. We could help ourselves a lot and create new jobs. So I hope it pushes through. I would love to see it on a federal level legal. That way we can get a lot of these people that don't even need to be in jail for stupid stuff, get them out of there.
Yeah, and a lot of people have nervous issues that aren't really clinical, if you will. People have stress and all these things. So, obviously a lot of people don't smoke marijuana because it is, quote, illegal. And to have a form of that product that is legal and doesn't have those other negative effects, but can give people the calmness, that's just, so many people out there have some serious nervous disorders that, they could be getting some treatment from this.
Yeah, absolutely. No, I'm definitely pro for it. I see T. Cruz says, Merlin, I haven't heard you talk about hemp in a while. Any notable developments in that industry? I'll be honest with you, T. I haven't really followed it that much. I am obviously was huge on that area. I do think that the hemp industry is a result of a bygone era. It used to be legal in the U.S., and then all of a sudden they blackballed this and they can't use it at all. And it's one of the miracle fibers for so many different purposes, but I haven't really followed through. I think if you get legalization of cannabis, then that will be the next big piece. And because it's legal, now you'll see a lot more farms of cannabis of hemp. Right?
Yeah.
I mean,
it's a totally different market. Obviously people who smoke marijuana for recreational use, that's one market, but we're looking at more of like the clinical aspects of it and all the technology and all the treatment that it can provide, which is a new industry.
Yeah, you guys are cracking me up. And yeah, there are definitely people who need it from a medicinal purpose, but I agree with everybody here. Would you rather have somebody be high around you or drunk around you? Well, usually drunks get into fights and create all kinds of problems. A stoner is just going to sit there and eat all your food and play video games and watch reruns of Seinfeld. Tillie, what else did we have? That was our list of things to talk about, right? Do you have any, want to talk about your upcoming classes? You got anything going on?
We start class on Saturday, and I'm super excited. Right now, we actually have Greg Hadley here from Chicago. Real great guy. He's been trading options forever. And what I really love about teaching is I get to see people learn. And, a lot of people are in a business where they're highly successful. We got one of our students, he owns restaurants. He's in technology business as well. And he, is excited to learn about his portfolio management and trading. And I just love to see people really understand what these products are and how to use them in their portfolio. And really, I think for me I love to teach, and it doesn't matter what you're teaching. Someone how to tie their shoes, cook, drive, whatever. It really, it's very rewarding to see that.
Nice. Well, you're a great teacher. I love what you've been doing. I know you were trying to get to the online stuff. Are you doing any online, or is it just physical location?
We're doing the physical location, and I think online, Online Training Academy is really streamlining the classrooms. And we've just gone to Zoom, but it looks like they've got their handful of online instructors. And, with online, you can have hundreds and hundreds and hundreds of people in a room and don't only have the need for as many instructors. So that's kind of, I think, a cultural change that we're seeing online.
All right. Well, that's the current revolution, right? I mean, that's pretty much what it's all about is the online stuff, which I certainly prefer the in-house, face-to-face education myself, but, we got to do what we got to do. Before we cut out here, there was a question that came through, and T. Cruz asked it for the second time, so I'll make sure I get to it. He says, it looks like the 10-year and the 30-year bond futures are hitting weekly demand or support. Do you think that we can break below, and what will that mean for home sales or new home builders like Lennar? I did bring up the 10-year futures product over here so we could take a peek at that one, just to give an idea what it looks like. What are your thoughts on the 10-year or 30-year bottoming out?
So we would expect that to be related to news of interest rates. So if interest rates were to rise, if Powell were to come forward and say they're going to raise interest rates, then we definitely expect to see bond prices drop. With the interest rate staying low, we would expect the bonds to bounce off of this demand and show some strength. So that is, we do expect these prices to stay high. So there's no reason for bond or bond futures, bond prices, ETFs, to drop significantly unless the traditional interest rates rise. And with no news of that and no whispers of that, so we would expect to see a rally. I particularly don't care for the area that's currently trading right now. I'd rather buy it lower. So I personally would wait for cheaper prices. It could drop down to 134. That for me would be a little more reasonable. So I do not trade bond futures. I use bond ETFs. But we would expect prices to continue to be relatively high priced and not go to the toilet.
Well, I mean, right now we're in a situation where you're going to see the yields most likely rise because of supply and demand. We talked about this with Bill Addis, who's got a great signature series, and I would encourage you guys to check that one out. But as the Treasury Department needs to pay off all the interest on the money it's borrowed, which is colossally above any other historic metric, they're selling more and more 10-year and 30-year. in selling more of those, obviously the price is going to drop. You're seeing yields rise. Now, if they come in and they manage to slash rates and go negative, well, that's a whole different can of worms there. It switches things up a little bit. But yeah, I do see it drifting back down. I think Tillie's probably right. I could see it dropping down the 134 mark, but it's going to be a slower process. Keep in mind that wild card of the Fed is always ever present. It will always be there, and they could instantly switch and go negative on rates, which would be crazy to think happen. But it could happen out there, and that would obviously just completely tear these charts apart when you go negative out there, because we've never seen it. It'd be kind of a weird predicament to be in. So that's what I think with regards to that 30-year. There we go. There are 10 in the 30.
Yeah, and Patrick was asking about why trade the ETFs, not the futures. The futures have a very, very high tick value, so can't trade them on. You can't really scale in their large market, and there tend to be a whole lot of volatility sometimes, but it doesn't go anywhere. So it can be very range bound, but the range bound is real choppy. And so for that reason, it's just, I think one thing that we all recognize is certain products that we invest or trade in, we kind of understand their movement and we can see it. And some markets you look at and just looks like, that's like a hospital machine, like somebody hooked up into a heart machine. Just, I can't really see the supply and demand, if you will, on some of those markets.
Well, and I wouldn't say, to Patrick's comment, I wouldn't say you're only ETFs. I mean, you trade futures.
Yeah, I just don't trade bond futures.
Okay. Got it. Yeah.
The bond futures for me is just a lot of noise, a lot of erratic movement.
Mm-hmm.
So I love stock index futures.
Right.
They're very systemic for me. I can easily see the money flow going in and out. I think there's a lot of underlying components that are impacting bond products that I don't understand, and therefore it makes the chart kind of muddy for me.
Yep. All right, well, we don't like the muddiness. We want clarity out there. If you guys want clarity, Tillie will be teaching a class this weekend. Given the whole COVID thing, who knows what the occupancy will be for that. But there are plenty of classes going on for Online Trading Academy. You can find more out by going to tradingacademy.com, or if you are in the Kansas City area and want to take the class with Tillie, you have to contact that local center and see if there's some space available. Tillie, well, thank you for joining today. I'm glad you're feeling better. I look forward to the market outlook this weekend. Of course, that makes me do a lot more work on the weekend, but we still love to do it. I'm happy to have it with us. I hope we can do it this weekend, right?
Yeah, I'm going to, and I think I'm going to start to incorporate a few more things and keep it real simple, but yeah.
Keep it simple. You remember, I have to produce these things. Don't do more work for me.
No, we'll see. I'll try to surprise you guys.
All right, sounds good. Well, again, thank you so much. Hope you have a fantastic remainder of your week. Hope your little one feels better, and I look forward to talking to you soon.
Great. Bye, guys.
Guys, that was Tillie Allison-Harris. She longtime trader with Online Trading Academy, or teacher at Online Trading Academy. Been trading pretty much every asset class out there. Hopefully, you guys enjoyed her insights on Facebook, GE, XLE, and even the cannabis industry. A lot of great stuff. She's awesome. All right, I'm going to quickly go through kind of what happened out there today. Here is your economic calendar of announcements today. And the only reason I bring this one up here is I think Brendan's like, I'm smoking weed. Well, you see what's happening here? Look at the labor productivity for Canada. You might want to cut back on that smoking up there, buddy. We went from 10% gain quarter over quarter in productivity in Canada. They're expecting it to drop to negative 6.9%. It was negative 10.3. What's going on up there to our neighbors to the north? You guys taking a break? Come on. Actually, that's not the highlight of the day. The highlight was actually this one, ADP non-farm employment change, coming out nowhere near expected. This was not good. We were expecting things to be moving to the upside with regards to the forecast. So you can see the previous month's reading was 404,000 jobs created. They expected to jump to 433,000, so 29,000 more. Well, we didn't move up at all. We actually dropped by almost 100,000. That's actually a pretty negative tone for the job market, especially now that Powell and Mnuchin are on Capitol Hill talking about the CARES Act. This might be one of those pieces where they'll push through some stimulus based off that. Now, as you notice down here at the bottom, we still have some stuff coming out tonight, like construction index for Australia. Those haven't been reported yet, but it does go into this earnings calendar. For the third, for the euro, you have a lot of final services and manufacturing numbers coming out. The U.S. has their unemployment claims as well as challenger job cuts, final services PMI, and ISM services PMI, and of course, natural gas storage. Probably the bigger one from the Southern Hemisphere is going to be that Australian retail sales number. That will happen probably a couple hours after we finish the show tomorrow. For your earnings, There, we go back to the earnings. This is all that was really important. There's really nothing big tomorrow. You have Marvell Technologies, which is maybe probably one of the more important ones. But this is what happened today. You see Snowflake. I was really bearish on Snowflake from the IPO because I thought it was just manipulated hype. Well, I was wrong again. It happens. But let's go to the daily chart here on SNOW. And you guys can see that Snow, nope, that's not Snow. Snow is not trading at 2 cents or less than a penny. SNOW. There's your Snow chart, and you see the horizontal line on your screen. That horizontal line is actually where it is trading at right now after they reported earnings, and I'll show you that earnings announcement so you guys can see the volatility on this bad boy. There it is. Oh, it actually moved up quite a bit. So this is where we are right now at 284.50, but it dropped all the way down to a low of, man, I can never read these lows, 267. So still a very healthy price out there for Snow. I actually thought it would be a lot lower by now once that lockup period for the IPO happens, or not IPO, but the insider numbers happen. I figured it would probably sell off from there, but it did not. So that's pretty much it for today. I don't see any real other questions. Why work when JT? Yeah, JT. Anything else in here? I think I got everybody's questions. Cool. All right, well, that's going to do it for me for today. If you guys anyway had comments, feedbacks, questions, those that sent in the questions, thank you so much. We had quite a few people sending questions today, and I have some that were unanswered. I will get to those as soon as I can. But Scott and Gene, Alex, Leslie, thank you guys so much for the questions. If you guys have something you want me to address on tomorrow's show or any show, send it on in at TraderMerlin@gmail.com or just go to TraderMerlin.com. Tomorrow, if technology serves me correct, if technology is on my side, we'll have the ambassador of opportunity, John O'Donnell, on the show tomorrow. I'm hoping we can pull that one off. John, you guys know, is an Austrian economist, doesn't like the Keynesian economic model very much, and usually has a lot of things to say about what's going on in the world. So it'll be a bit broader picture tomorrow with the ambassador of opportunity, John O'Donnell, and I think that will pretty much do it for today's show. All right, everybody, thank you guys so much. Hope you enjoyed today's show. I look forward to tomorrow's. We'll see you guys tomorrow. Take care.